What's up, guys? Today we'll be taking a look at penny stocks, what they are, what you should keep an eye out for, and how they trade. So let's just jump right into it. Penny stocks are essentially speculative investments, and they're mostly small companies, and they have very large swings in their stock price by only a couple cents or even a couple hundredths of a cent in some cases. So penny stocks, also known as micro cap stocks, are right here on the left-hand side. They're $50 to $300 million companies, and they are not traded on the New York Stock Exchange or the NASDAQ. They are typically less than $5, although that's not always the case. And there's a big risk to reward ratio. And this is where a lot of people can make a lot of quick money, or they can lose a large portion of their portfolio essentially overnight. So as we take a look, here's just one example of an OTC or a penny stock. It has a couple of names, which I'll get onto in a couple seconds. But as you can see, just looking at the year to date, the return is crazy. And as you can see, it really hasn't jumped up too much, even a couple cents here. Like if we zoom in on a couple, as you can see, my cursor is at 569, and then if you just jump up a couple, as you can see there, just 11 cents, you're already up 2%. So you can see large percentage returns in small increments of the stock price. Likewise, that goes both ways. So a little bit up is a larger return than normal, but also a little bit down is a massive loss. Now, a lot of people love these because they are a great way to make a lot of money quickly, although they are very speculative. So, as I said, OTCs or over the counters or penny stocks, they have quite a couple names to refer to them. Now, as I said, penny stocks, OTC, or over the counter, pink sheets, micro caps, as mentioned earlier, and gray sheets. Now, they do have a couple different meanings. So, OTCs have price quotes through the OTC bulletin board and the OTC link. And OTCs can be big and they can be small. They can be foreign, they can be domestic, and they can have illegitimate businesses, such as cannabis. That's a hot one right now because it's legal some places and illegal other places. Although they have no reporting requirements, and that's the big thing. And I'll get onto that as well in a second here. Now, as I mentioned, gray sheets, they do not file necessary paperwork, and there's really limited pricing info, which make these even more speculative. So they are at high risk because of this lack of information and also the lack of liquidity. There's not as much action on these markets because they aren't as popular. Furthermore, when someone moves into the stock, it can make a single-handed movement. So in a stock, let's say that's $50 million, and they move in a position of $1 million or try to, their order might not be fulfilled. So, and this is both ways, buying and selling. So it gets a little bit more risky because if you want to get out, there is a decent chance that someone's not on the other side of that order to buy your equity. Now, again, as I mentioned about the fraud, there's two different kinds that are really popular, as you guys have probably heard of pump and dumps, where basically people hype up the stock. They hold it and they have a larger public following and they kind of hype up the stock and a lot of their followers buy in, and then once it's at the top, they sell their own equity and run away with the profit. And then there's also bogus offerings where essentially it's just fake news and people will invest upon that, and then they come to find out that it's fake and it plummets and they lose a ton of money. Why would people want to get in on this? Well, because you can get in on the ground floor on a lot of these companies before they go onto the public exchanges, and there is a good possibility of making a higher return. You can make profit from small changes. Now, one thing that I wanted to go back to is how they are traded. So you guys might be a little bit confused. They're not traded on public market, but they are traded basically from broker to broker. And as I mentioned earlier, the OTC bulletin board, or the OTCBB, helps with the stock prices and the quotes, and that's how they facilitate them. Now, if you are going out there and feeling very, very confident in yourself, I do want to mention that they do have typically very high commission costs. I know TD Ameritrade has a $6.95 commission cost, which is a large portion when you're talking about a stock that is less than $5. So if you move into a position, let's say of $100, it's going to be 14% essentially just to buy and sell. So you got to keep that in mind. But other than that, this is just a quick overview on what OTCs are and why they're popular and why a lot of people discourage investing in them. But again, invest with the best practices and proper risk management, and treat these companies similar to how you break down publicly traded companies, although with a lot more caution, understanding that they are a lot riskier and very speculative due to their limited size. Now, I would really appreciate it if you made it this far in the video and dropped a thumbs up and a sub. It helps out the channel a lot, and I'll be back with another video tomorrow.